Hi everybody, this is AJ speaking. Today I wanted to talk to you about the developments in the European car market and also touch on Tesla's sales performance in 2024. On this first slide, we see total sales development over the last 2 years. So you're down here, you have the quarters and totals per year. So in 2023, European car market had a size of 12.8 million vehicle registrations. So this is not like sales to dealerships that are called wholesale sales. These are actual sales to end customers. These are like what I call real sales. And then down here you can see in 2024 the total rose to 13.0 million vehicles. So that's a modest growth of 0.9% year on year. Here, the latest months, December 2024, we saw a positive development. Sales were up 4%. Overall, how does this rank globally? The Chinese comparable number, retail sales number, is about 23 million vehicles. So the Chinese market is not double, but almost not too far from double the size of the European market. And the European car market, and this comprises 31 countries. So that comprises not only the European Union, but also countries like United Kingdom and also Switzerland are also included here. So this is more Europe in a geographical sense and not so much the European Union, just to keep this in mind. And in terms of how this compares to the United States is about 16 million vehicles in 2024. So the US is materially larger than the whole of Europe, really, in terms of vehicle sales. On this slide, you see a breakdown of the market. So here again, the 13 million vehicle sales total, and then how they and you see all the components. And what you can already see about European market is that yes, there's a large number of markets. I'm showing here 31 because these are the reportable markets in Europe. There are technically a few more tiny markets, but they're so small that they're not even being reported. And you can see that the top 10 countries, so Germany, United Kingdom, France, Italy, Spain, Poland, Belgium, the Netherlands, Sweden, and Austria, account for 85% of total vehicle sales in Europe. And then all the rest is really not a needle mover. That's one observation. So when we look at these charts, so here you can see the total annual sales. So in Germany, 2.82 million vehicles were sold in 2024. And the Germany's market share in terms of total vehicles, 13 million vehicles, was therefore 21.7%. And how have Germany's vehicle sales changed in 2024 versus 2023? So Germany lost 27,000 vehicle sales. The second largest market, the United Kingdom, gained 50,000 units. France was the biggest loser. They lost 56,000 vehicle sales. And the biggest gainer was Poland, plus 77,000 vehicle sales. So you can see that there are quite mixed trends. That's why it's always good to look at Europe's top markets separately and not just on the aggregate, so you can see what's going on. So on this slide, we look at the battery electric vehicle market, or BEV market, in Europe. And you can see that sales came down by 1.3% in 2024. And we get to why in a second. So the European BEV market is now just under 2 million, while in 2023 it was just over 2 million. This was primarily driven by Germany, as we see in a second. If we just look at the monthly developments, December 2024 was broadly flat compared to December 2023, and then overall we see these peaks here. I will talk about these peaks a little more in detail later when we talk about Tesla, but this has to do. This is significantly affected by Tesla, but also by some other automakers, a delivery strategy, which creates this pattern, but I will talk about this later in more detail. So then on this slide, you see the total BEV market broken down into the separate countries, and this chart is similar to the total vehicle market chart that we looked at earlier. So you have here total BEV sales per country, the market share of each country, and then the change year on year in 2024. So, and you can see straight away that here this giant red candle is from Germany, and Germany lost 144,000 BEV sales on a total market now of just 381,000. Germany used to be by far the biggest electric vehicle market, exceeding 500,000 units per year. But because of this 2024 significant downturn, actually United Kingdom is just ahead of Germany in Europe now as the biggest electric vehicle market, because here we have some very um, opposite trends. So in Germany, Germany abruptly killed all the BEV purchase subsidies end of 2023. This drove a significant year-on-year reduction in electric vehicle sales. However, in the United Kingdom, we saw the opposite. We see very strong incentives. It's kind of a no-brainer to buy an electric vehicle in the United Kingdom, and that's why we see this quite substantial increase. And the fact that the United Kingdom sells now slightly more BEVs, even though the total car market is quite a bit smaller than Germany's, gives you some indication what's going on. So incentives are clearly a very strong driver of electric vehicle demand. And I posted this recently. The reason why electric vehicles are still so dependent on incentives is that the cost savings that have been generated mostly in China, the European and also not the North American consumer can mostly not tap into. And the reason is that the lower cost electric vehicles in China are with outside of the reach of European and North American customers due to tariffs. And that's why electric vehicle prices are not coming down the way they should be if you had a free market. And for that reason, electric vehicles are still um, dependent on incentives to a certain degree. And so before, and my expectation is before we see a more cost-effective battery supply chain in Europe and also in North America, um, battery electric vehicle adoption will likely trade sideways for some time in those markets. And then lastly, before we leave this slide, you can see here that the European BEV market is even more concentrated than the overall auto market, with 87% of sales taking place in the top 10 countries. The composition of the top 10 countries is a bit different, however. UK, as we discussed, is now number one, Germany number two, France three, Netherlands four. Netherlands is quite a large market relative to its total car market size. Belgium five, Norway also punches significantly above its weight in EVs. This is also driven by significant government incentives pushing EVs. Sweden 7, Denmark 8, 9, Italy 10, Spain. And then if you take a look over here, you can see that amongst these 31 countries, um, 13 countries account for 94% of all vehicle sales. And because, of course, this has to do with the size of the country, but also um, or I should say the large difference in country size in Europe, because there's a handful of large countries and then there's a large number of relatively small countries, but also with wealth. There's a clear correlation in Europe where you see that wealthier country have a much faster adoption of electric vehicles, and poorer countries have much slower one, and some have very little electric vehicle adoption still. So on this slide, we look at the market share of electric vehicles. So market share of electric vehicles is simply electric vehicle sales divided by total sales. And in December, 18.8% of all sales were electric vehicles. This came down by 0.8 percentage points relative to December 2023. The reason is there were still some subsidies in December 23 in the largest market, Germany, 2023, that created here inflated sales, and that's why you have a decrease year on year. And all these numbers, the 2023 numbers, they're all inflated by Germany. All these market shares are inflated by Germany because of generous EV subsidies, which were all removed. And that's why when you look at these year on year numbers, they're all kind of off. If you really want to look for the trend you would really have to figure out how you can adjust these numbers for excess, say, EV sales driven by generous German EV subsidies. But long story short, once you go down this rabbit hole, you also would have to do it for other countries, and then you would have to strip out these numbers. So the bottom line is, we don't have clean data, and it's very difficult to adjust it for all the various EV subsidies. And on top of that, it's not only that EVs get subsidies, but there are also various kinds of vehicle ownership subsidies in Europe. They're quite common. They're very significantly from country to country. And so long story short, we don't have really good data in Europe, despite quite granular reporting by each country. On this slide, we look at the EV market share per country, and you can see Norway is the clear outlier because they've been pushing EVs for longer than most countries, and more importantly, more significantly in more countries. That's why almost 90% of all vehicles sold in 2024 were electric EVs, BEVs. And the market share increased 7 percentage points. So it was about 82.9% in 2023, and now it's almost 90%. But the biggest year-on-year market share, EV adoption gainer is Denmark. Is now the second country in Europe that crossed the 50% market share line. But then we have also notably some losers. I mean, Iceland is a tiny country. um, we don't really need to talk about them because they're not a needle mover. Because I look at all this stuff in terms of from an investor angle. Um, and so when we look at the needle movers, so Germany, market share of EVs came down 5 percentage points. That it's quite substantial. If we look at the other large country, so we talked about United Kingdom is doing well, 3%, almost at 20%. It is pretty good. 20% is often considered a threshold where um, new technologies adoption accelerates. However, what people who who are proponents of the theory, which I'm also one of, they hardly ever tell you is this depends um, on whether something is subsidized or unsubsidized, because most of the cost curves people show you these are unsubsidized products, like cell phones. Cell phones have never been subsidized, or TV. Uh, Color TV, sorry, the switch from black and white TV to color TV. This adoption curve. When you look at them, these products have never been subsidized. But the subsidies in vehicle markets, they play a huge role, and therefore you have to look at these adoption curve with a huge grain of salt, because they create all kinds of statistical effects, and that's why you cannot directly apply them to the EV vehicle adoption problem. And then the situation of tariffs make this even more complicated. So I think that this is not even enough covered by people like Tony Sieber, and I guess the reason is he's not really too deep in the vehicle market. He's more like he thinks very big picture, of course, and he's very good in doing that. But when it comes to the nitty gritty stuff about vehicle sales, I think this is not really his forte. So now we finally get to Tesla. So Tesla sold in December 44,700 vehicles, for a total of 84,600 vehicles in the fourth quarter of last year, for a grand total of 330,000 vehicles for 2024, which implies a 35,000 unit reduction year on year compared to 2023, or a 9.5% vehicle sales decrease. The primary driver was Germany, because of the reason already mentioned. Incentives were removed. Tesla, clear market leader in electric vehicles in Germany. The large German market significantly shrinking had, of course, significant effects on Tesla. Then, of course, Germany also affected all these numbers, because these numbers were basically inflated. All these Tesla 2023 numbers were inflated by incentives relative to 2024, and that's why we see these frequent sequential, sorry, year-on-year decreases. So, for example, we saw um, March. March of 2024, we saw a significant decrease, 34%. This was globally in automotive a pretty bad quarter. Tesla also had various issues. There was in September the Berlin factory production shut down because parts were missing, because ships had to go around Africa instead of going through Suez Canal because of the attacks that took place in the Red Sea. Then only 2 weeks later, there was the arson attack on Berlin, shut down the factory. There were other logistical things, so this was not a good quarter, and that's why we saw the massive drop. This basically continued, but again, this is to a significant degree driven by removal of incentives, and this altogether gave us this reduction of 9.5% in Europe. Then, before we go to the next slide, you can see this pattern in Tesla sales. And that's why I also split it out in quarters. You can see the first months of the quarter very low. It increases in the second month of the quarter, and then it reaches peak in the last quarter. That's in the last months of the quarter. And you see the exact same pattern in the prior quarter, and you see the exact same pattern in the quarter before that one. And this goes back a long time, and has been even more extreme further back. So the reason why Tesla does this, and I covered this many times before, as I try to be brief, Tesla sends out cars early in the quarter to the furthest away destinations because they want to use the cheapest way of transport, and cheapest way of transport is usually the slowest one. So it can take a few weeks before vehicles produced in that month reach the final destination, and then they have to be sold to the customer, and Tesla has to arrange the handover, get all the documents, make sure the payment is there, blah blah. So this then often delays sales into the last months of the quarter in all markets. So for example, Berlin is quite far away from Spain. So early in the quarter, Tesla sends vehicles to Spain. They take a couple of weeks to get there. For the average customer to get his stuff ready, it takes a few weeks. And the customer in Spain takes delivery. Sale is recognized. Then a somewhat closer customer, let's say customer in France, same story. Tesla sends vehicles to France around May, saves a few weeks. Customers take deliveries also in the last months of the quarter. And then Germany, so basically the local market relative to Tesla's Berlin factory is served last, because Tesla, for example, all the sales in Germany's by far largest city, Berlin, Tesla can literally just ship over like within an hour to the city. So so they get served last. It is always creates this delivery pattern. And the reason why Tesla does it is it minimizes cash consumption. People who know Tesla's financial well, they know that Tesla sits on a huge cash pile, but cash is not free in the financial markets. By minimizing the cash consumption, Tesla can, for example, increase interest income on the cash, and there's also a lower cost of capital. But anyways, this is like too much finance stuff for this video, and I will touch on this in another video where we talk specifically about this point, maybe in more detail. Otherwise, this video gets way too long. So because of Tesla's delivery pattern, and here you have basically Tesla's market share. We have like this very weird change in market share every month. So in the first months of a quarter, Tesla is always very low market share, then it decreases, and then it drops again. So to look at Tesla's market share, we really have to look at a trailing 3 months metric. Trailing 3 months is you look at the average of the last 3 months. So you sum up Tesla's last 3 months sales and divide them by the sum of the last 3 months total market sales to get to the to a more to a less fluctuating market share number that is more meaningful, because the trailing 3 months will give you a more basically a better comparable to compare market share trends. And this is what this slide does. And here you can see how Tesla's rolling, trailing and rolling is kind of the same term. Market share is developing you can see that Tesla reached kind of a peak in 2023 here in March. Um, incentives were very helpful. Um, then it came down quite a bit. A lot of competitors launched vehicles that didn't sell very well and significantly discounted them. Tesla also discounted them. So there was this kind of price war ongoing. It's still ongoing, and and of course, the more competing vehicles are in the market, the more market share you will lose, because even if the competing vehicle isn't that great, there is a non-zero number of customers that will buy that vehicle. And if the market is not growing rapidly, that of course will take market share over time away from you, as simply because the offer is growing so much. This is kind of what we saw in Europe. There are probably other factors. The Model Y, the primary product for Tesla in Europe, just like in every other country, is getting kind of old, especially given this plethora of new electric vehicle launches, and all this took market share away. Um, this will be interesting to watch in 2025. Tesla is about to start deliveries of the new Model Y in Europe. Also in China, China might launch slightly later because of the license Tesla has to receive first from the authorities in China. This typically takes about 50 days, and this would get us right to end of February, early March, before Tesla can ship out new Model Ys. And then, of course, there will also be the launch of the new Model Y in the US. So, so it's going to be very exciting how the market receives the new Model Y. I talked about this before, but for me, the new Model Y is what I would call a slight update. Basically, what Tesla has done, freshed up the interior, moved a lot of the creature comforts from the new Model 3 into the Model Y now. Perforated seats, ventilated seats, some LED lighting, the screen for the, 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 the rear customers, the rear passengers, um, powered liftgate is new to the Model Y, sorry, powered hood lift, and new optics, new lights, but I think under the hood it's pretty much the same vehicle, which is not a bad thing, by the way. And the reason why it's not a bad thing is by not trying to build a platform from scratch, Tesla's saved virtually billions in development cost. It significantly de-risked the transition, because if you always, when you make a new platform, there's always a risk that there's some flaw, and by Tesla just using the uh, all the main components from the outgoing model, you reduce risk, you save a lot of cost. There's less change to all the tooling globally. So because right now Tesla is certainly better off taking these saved dollars and invest them into autonomy, rather than trying to make an already very good product a slightly better, because the marginal utility in pumping these billions into autonomy is much higher than trying to make a very good Model Y just a little bit better. And then before we leave this slide, so if we look at the market share, so as of December, Tesla's market share on a trailing 3 months basis was 15.1%. So December trailing 3 months means you take the total sales volume of Tesla for October, November, the sum, you divide it by the total vehicle market sales volume for October, November, and December. The resulting number is 15.1, so BEV market that is, and so that's why I often call this a rolling market share. Then when we look at the exact same analysis on a total vehicle basis, so before, so this was electric vehicle market, and now the total new car market in Europe. So Tesla's market share actually increased a little bit, but very, very modestly. This is 0.03 percentage points, which is 3 basis points. This is a quite marginal increase, which basically shows you the issues with EV adoption due to various changes to incentives. But then, of course, also Tesla's still very well selling Model Y um, and Model 3. It's just a limited product lineup, which Tesla is about to expand anyway. Next, we look at the competitive landscape. So these are the top automakers or auto sellers, I should say, in Europe. So you have VW Group, which sells through various brands in Europe. VW Group sells through obviously the Volkswagen brand, but also the Audi brand, the Skoda, the Seat brand. Porsche also is part of this number here, and a few other brands. And you can see that Volkswagen clearly dominates the European market, sold in December 2024. This is again trailing 3 months market share, because the trailing 3 months is always a better metric because of all kinds of logistical things. And you can see Volkswagen has been trending up and sold 27.2% of all vehicles in Europe um, in the last 3 months to December. If we look at the other trends, so Volkswagen has been trending up. The biggest loser is Stellantis. Stellantis, you can see here, they were significantly above 16% not too long ago, just a few quarters ago, and they seem to be dropping soon below 13%. It's a huge market share loss. So the biggest loser in Europe is clearly Stellantis. The perhaps second biggest loser, and to a lot of people, for some reason, it is kind of a surprise, judging by the comments I often get, um, is Hyundai. Hyundai Group is, is losing a lot of market share. Um, I will cover the details why it is in another video where I talk about Hyundai's financials. Um, but this was long in the making and was obvious it would happen in the fourth quarter. But this is for another video, because otherwise this gets too long. And then we have the perhaps surprise market share winner this year is Renault Group. This is driven by various vehicle launches, and the Renault Group is a seller of mostly affordable, smaller vehicles, and that's why they're um, not that much. They're not really known at all in North America, for example, because Renault simply doesn't really make vehicles that are suitable for that market. Renault is really focused on more compact, more affordable vehicles, and the new product launches have been doing quite well. Um, but we have to see whether this lasts or whether this is just a sort of a uh, new vehicle launch effect. Then when we look at Toyota, because of Hyundai's weakness, moved up 2 ranks to number 4, was recently moved up 1 rank. Hyundai used to be ahead of Toyota. You can see it here in the long-term trend, but now Toyota, not because Toyota did so great, but because Hyundai did so poorly, Toyota pulled ahead, and even, I mean, these numbers round to the same number, but BMW group even is slightly ahead of Hyundai, even though there was a significant gap in 2023, briefly narrowed around this time of the year. And then we have Mercedes. Mercedes is interesting. Um, yeah, Mercedes always is kind of at the same level, around, yeah, near the 6% mark or just under. Ford, it's hard to see here, but Ford has seen sort of a long-term downward trend in Europe. It's probably because the mothership in Detroit isn't really focused on Europe anymore, because European market is tiny to Ford. Ford is really all about North America. There's nothing else that really matters left in Ford anymore outside of North America. And yes, so Ford is probably dropping significantly below 3% in 2025 is my prediction. So then Volvo actually sells currently at all-time record high unit levels. It's kind of hard to see here because the market share overall is not that large. But I've covered this recently in my deep dive in Volvo, and this is driven um, by various vehicle launches. But the issue for Volvo is that um, a lot of their cars come from China. Volvo is owned by Geely. It's a list, so Volvo is listed, so you can buy shares in Volvo cars, but the majority of the stock is owned by the Chinese company Geely, and um, so lot of this, especially the more affordable vehicles, they come from Geely, and they're also now affected by tariffs. So this is a big problem for Volvo. And then, so Volvo is number 9 currently, and then Tesla is number 10 at 2.7% market share, and you can see this pretty much. I mean, it came down a little bit as we saw earlier, but it's fairly robust, I would say, if you compare it, for example, to some of these other guys that, for example, if you look at Stellantis, has dropped quite a lot. And then lastly, Nissan, who made the cut to be included in this analysis, has also been trading down. If we extended this chart for many years out, Nissan would be one of the biggest market share losers. Nissan used to be quite strong in Europe. And then lastly, before I let you go, the ICE vehicle market, you can see here in this darker blue, this is a monthly chart, the, the years 2022, 2023, and then in this turquoise color, 2024 actuals. And the reason why I did it this way, because I want to do some linear regression on sort of the long-term trend, and then a linear regression trend on the more recent sales course. And you can see if you run the regression on the more recent, so the last 12 months, you can see that the drop of ICE market share is much more rapid than if you look at the long-term trend. And so I've been running this analysis for a couple of months, and you can see so far this has been quite accurate, because you can actually see how it keeps dropping more precipitously months by months. And my 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 expectation is that ICE market share will be dropping close to a quarter by end of 2025. So around 20-25% is my estimate. And this doesn't mean that Europe is making a lot fewer engines. This is often assumed, oh, there's a collapse of the ICE supply chain, blah, blah, blah. This is not true, because Europe, there's significant adoption of hybrid electric vehicles, and they still come with a combustion engine. So all that happens in the supply chain is they basically make smaller engines, but the unit number is not going to change very much until we see greater adoption of electric vehicles. Then the other trend that we see in China that has not fully taken hold in Europe yet is the trend to another type of electric vehicle where the combustion engine is really just generating electricity. This is very uncommon in Europe. Most hybrid vehicles in Europe, the combustion engine is still connected to the wheels, has a gearbox. This is different in China. In China, there's a category called EREVs, so extended range electric vehicles. And what they're basically electric vehicles where they added a small industrial combustion engine that purely generates electrons, feeds the battery, and has not even a gearbox that is in any way connected to the wheels. Anyways, so with that, see you in the next one. Bye.